The federal government has hit the pause button on a legislative decision regarding the revised treatment of outstanding loan balances on LRBAs. ASIC has put in place measures to remove the exemption from the ban on conflicted remuneration for commissions in relation to certain life insurance products. Australia's economy grew by just 0.3% in the March quarter and 1.7% over the year to March. The RBA left rates on hold at its June meeting, stating that investment had picked up in non-mining sectors of the economy. And in international news, Japan's economy has grown for the fifth straight quarter, the longest expansion in a decade, thanks to government stimulus programs and strength in exports. Michael Pollock has the details.
The federal government has delayed any legislative decision regarding the proposed revised treatment of outstanding loan balances on limited recourse borrowing arrangements. The proposal was specifically excluded from the Treasury Laws Amendment 2017 Measures No. 2, Bill 2017, tabled in Parliament in late May. Originally included in the bill was the requirement to record a total superannuation balance credit from any principal and interest paid on a liability against an asset held in retirement phase from funds held in accumulation phase. This treatment was only to apply for LRBAs entered into after 1 July 2017 and would not capture refinancing activities for the outstanding balance of an LRBA entered into before this date. ASIC has released a regulatory instrument titled ASIC Corporations Life Insurance Commissions Instrument 2017/510 to give effect to the Corporations Amendment Life Insurance Remuneration Arrangements Act 2017. That Act amended the Corporations Act to remove the exemption from the ban on conflicted remuneration for commissions paid in relation to certain life insurance products. The instrument sets limits on commissions and requires amounts to be repaid if the policy is cancelled within the first 2 years of the policy, termed clawback. Among the provisions of ASIC's newly released Life Insurance Commissions Instrument are setting the commission caps at 60% of the premium in the first year of the policy from the 1st of January 2020, with a maximum trailing commission of 20% of the premium in all subsequent years, providing for a transition period with a commission cap set at 80% from January 2018 and 70% from January 2019, requiring the clawback of 100% of the commission if the policy lapses in the first year and 60% clawback in the event of a lapse in the second year. Australia's economy grew by just 0.3% in the March quarter and 1.7% over the 12 months to March. This follows a rise of 1.1% for the 2016 December quarter. Despite the very modest gain in GDP, it allowed Australia to continue its stretch of consecutive quarters without a technical recession, that is 2 consecutive quarters of negative growth, to 103. The ABS reported growth across 17 of the 20 industries included in the national accounts, with the largest contribution coming from the services sector, in areas such as finance, healthcare and social services. Conversely, the trade sector, as measured by net exports, that is exports less imports, fell 0.7% for the quarter, led by falling exports for iron ore and coal shipments, which were interrupted by bad weather in the quarter. At its June meeting, the RBA board retained an unchanged monetary policy stance, which it considered was consistent with achieving both sustainable economic growth and the inflation target over time. RBA Governor Philip Lowe, in the accompanying statement, claimed that the transition to lower levels of mining investment following the mining boom is almost complete, and business investment has picked up in those parts of the country not directly affected by the decline in mining investment. Lowe also confirmed that housing market conditions varied markedly between the states and territories, with prices rising briskly in some markets while starting to decline in others. Further, rents were increasing at the slowest rate in 2 decades. Credit growth in the private sector has maintained a slightly slower pace over the early months of 2017 compared with last year. Private sector credit grew 0.4% for April, which translated into a yearly increase of 4.9%. The annual pace of growth was the slowest recorded in almost 3 years. Credit growth varied across the different sectors of the economy, which reflects the mixed picture of domestic economic activity. While housing credit rose 0.5% in April and maintained its annual pace at 6.5%, business credit grew by just 0.4%. This meant the annual pace of business credit growth continued to slow to 3.1%, the slowest annual growth since May 2014. Japan's economy has advanced for the fifth straight quarter, the longest expansion in a decade, with support from government stimulus and continued strength in exports. First quarter GDP rose by a more than expected 0.5% quarter-on-quarter, for an annualised rate of 2.2%, which compared very favourably with upwardly revised 1.4% growth in the prior quarter. Personal consumption, which accounts for approximately 60% of GDP, grew 0.4% from the previous quarter, while capital investments fell 0.2%. A rise of 2.1% in exports was primarily responsible for the continued expansion of the economy. The annual headline inflation rate also accelerated to 0.4% in April, which was double the rate recorded in the previous month. ASIC has issued a consultation paper, CP284, Example Statement of Advice for Life Insurance, update to RG90, in which it seeks feedback on a new example SOA and related updates to the guidance contained in RG90. The release of the paper follows a number of policy developments in the retail life insurance sector, which have highlighted the need for improved SOAs. ASIC said the consultation paper sets out the rationale for updating RG90, which would result in the current example SOA being replaced with a new example SOA for scaled advice for life insurance for a new customer. In CP284, ASIC further notes that SOAs that are too long and difficult to understand detract from customer engagement and may lead to poor decision making. ASIC is again deferring the starting dates for some superannuation reforms, which were initially announced as part of the changes under Stronger Super. The reforms relate to choice products and portfolio holdings reporting requirements, which fall under the Corporations Act. Specifically, product dashboard requirements for choice products, which was due to take effect from the 1st of July 2017, will be delayed until the 1st of July 2019. The portfolio holdings disclosure requirements will also be deferred until the 31st of December 2019. ASIC will also extend previous relief that allowed registrable superannuation entities to provide a web link rather than hard copy product dashboard with periodic statements to fund members.